SA will exit the grey list in 2025. That's according to Reserve Bank Governor Lesetja Kganyago. While addressing the Financial Sector Conduct Authority Industry Conference, Kganyago said he was confident that SA will be removed from the list by the next review date, given that work is underway to fix the identified issues. The governor has added that being on the watch list has been a costly episode. High interest rates have weighed on Growthpoint. The V&A waterfront owner has reported an 8.6% slide in half-year distributable income per share. That's as the total cost of funding during the period rose close to 17%, and this is largely likely to continue. The company has cautioned that annual distributable income per share is likely to be between 10 and 12% lower as a result of higher interest rates. Orion Minerals has narrowed its losses. At the half-year mark, the firm has posted a loss of 5.6 million Australian dollars. That's from a loss of $7.4 million previously. The owner of the Oki copper project says the losses were primarily driven by contractor and advisor expenses, as well as exploration costs. Many clinics been cleared of billing fraud following an independent investigation. Last year, the private hospital group appointed ENS Africa to conduct a forensic probe into anonymous claims of billing irregularities at 6 hospitals in Gauteng and Western Cape. That's as a whistleblower claimed the ICD-10 codes on patients' bills were manipulated to inflate the claims submitted to medical schemes. According to Mediclinic, the investigation found no evidence of deliberate manipulation of patients' bills, and there were neither incentives nor direct financial benefits that could encourage Mediclinic and its staff to do so. Country Bird has no intention of making a takeover bid for Quantum Foods. The statement comes after Country Bird increased its holding in Quantum Foods. The firm did this by snapping up Astral's 9.8% stake in the firm. The move takes Country Bird's holding to 15.8%. British American Tobacco has completed the sale of a part of its holding in India's ITC. The Daniel cigarette maker's stake in the firm now sits at 25.5%. That's from 29% previously. The firm says the funds it raised from the accelerated book build will be used for share buybacks over a period ending in December next year. The first share buybacks will start this year and £700 million will be put towards the move. BAT says sustainable share buybacks will now form part of the 4 elements of the firm's capital allocation plan, and this will be alongside reducing net debt to within a new range of 2 to 2.5 times adjusted EBITDA. The previous target was 2 to 3 times. EOH says it continues to operate in a challenging environment, and while trading and tender activity has improved, the technology services firm will report a headline loss per share of between 10 and 12 cents for its first half. The group will open its books on the 26th of March. And share conditions remain tough in South Africa, or trade conditions rather. Research from the SA Chamber of Commerce and Industry shows that 69% of respondents experienced trade conditions as negative in February, with 79% of participants viewing the month as worse than a year ago. And their outlook on the situation is grim. Just 43% of respondents have positive expectations about future conditions. In international developments, Zara owner Inditex says its sales surged in the first half of the spring season between February 1st and March 11th, after the Spanish fashion giant surpassed main rival H&M's annual sales growth. Let's listen to this report for more.
Inditex sales jumped 11% during the first half of the spring season, the Zara owner said Wednesday. It means the Spanish fashion giant continued its winning run against key rival H&M. Inditex widened its lead over the Swedish retailer as it delivered fashion trends faster from nearby suppliers. It was also able to sell more clothes at higher prices to upmarket shoppers. These moves have helped counter the fast growth of Chinese rival Shein. But sales are now growing at a slower speed as the pace of price rises moderates. In January, H&M reported a 4% drop in December and January sales, while Inditex sales were up a tenth to a record of over $39 billion in the year to January 2024. Those results were in line with analyst expectations. Inditex's core brand Zara began to raise prices earlier than H&M in response to surging inflation. But over 2 years, Zara has raised average prices at a slower pace than H&M and others. That's according to retail intelligence company Edited. It said the average price of apparel in stock at Zara for spring this year is 11% higher than 2 years ago, while stocks at H&M and rival retailer Mango are both up 20% versus 2 years ago.